Welcome back, ladies and gentlemen, on this wonderful Wednesday for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And if you are new around here and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because I drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that is exactly what we intend to do in this video. Yesterday, we spent quite a lot of time looking at the dollar and the ramifications a weak dollar, a weak Dixie would have on the risk markets. So Bitcoin, crypto more broadly, gold, stocks, so on and so forth. And the high probability that the dollar was actually going to roll, the Dixie was going to roll. There's technical reason to support this that we have on our kind of macro time frame in regards to the channel that we've been in since 2008. There's also fundamental reasoning in regards to what's happening with the debt-based system and debt instruments right now. So that is why we've seen the likes of Stan Druckenmiller, one of the best asset managers in the world, move from Nvidia down to the Russell 2000. Nvidia, I think, just the other day traded, in terms of volume, more than the entire 2,000 stocks that make up the Russell 2000. So he's essentially betting on interest rates coming down, the dollar coming down, and risk doing well. And of course, crypto is going to be the fastest horse in that race. So we're going to be starting off by looking at a little bit of things relating to the dollar, the Euro USD chart. We're also going to be talking about the fact that you had a bit of a flop in regards to ADPs yesterday. Of course, we got non-farm payroll on Friday. Tomorrow, we've potentially got the European Central Bank lowering rates. Even though they're lowering rates, the euro seems to want to gain ground against the dollar. And the question is, well, why is that? We're also going to be looking at the fact that institutions are absolutely gobbling up Bitcoin, whilst retail is uncertain. You know, I saw a predominant or a bigger YouTuber than we are, beginning with an A, actually saying and coming out and saying he's sold and he's out the markets now, which is just absurd to me, given where we're at, you know. And really the reasoning, or the only reasoning I could find, was based on an indicator and a feeling, which doesn't make that much sense to me. You know, we don't invest based on feelings. The masses do that. You know, the Wall Street cheat sheet is all about that. We invest based on technical merit and what's more probable in regards to the direction we think the markets are going as a result of that. So we'll be looking at that. Also diving over to the Bitcoin chart. We've got that small head and shoulders. We've got that big head and shoulders. We'll be sort of reaffirming that. Bitcoin kind of squeezing, popped out. I think you're on your way to 91,000, and I think the next leg of this bull market is about to begin, and it has a lot to do with the dollar rolling over and risk doing well more broadly. Then we're going to be talking and playing a clip. Brad Garlinghouse appeared on Fox yesterday. We're going to be playing a very small clip of that because he talks about Ethereum ETF and altcoin ETFs that are inevitable, and I believe they are, and I actually think just like we knew an Ethereum ETF was coming based on ETH dominance and ETH BTC, I also think there's a lot of technical merit to suggest that altcoins are going to do very well, and there's likely going to be a fundamental reason behind that in regards to the allowances or the speculation of ETFs for them. We're going to be looking at a number of crypto indexes and also the total too. So, as always, ladies and gents, when do we not? We have a hell of a lot to get into. Let's dive into it all. Let's start off with the euro dollar. So we have been looking at the Dixie, and we have a broader time frame on the Dixie, which we're going to come on to in just a second. I actually think the euro looks pretty good against the dollar. I think it's kind of based out. I think it's going to gain ground against it. Now, the Dixie is predominantly made up of the euro. It's something like, I think, 40 to 50% of the basket that makes up the Dixie. Remember, the Dixie is just the dollar versus everything. David Hunter calling for an 80 on the Dixie. We're basically not calling for that, but we're calling for this coming to the lower band of the channel that we've had since 2008. That's going to see risk do very well. Also, the timeline for this to take place is likely going to line up with a Bitcoin 4-year cycle theory before it sees a bounce, likely because of fear and people pivoting back into dollars. So the trade now is risk, not dollars. The timeline for this coming down to the lower band of our macro channel perfectly aligns with PMI cycles, global liquidity cycles, and the Bitcoin 4-year cycle theory and how long a bull market may take after the halvening, you know, what the sort of time frame is for that. We will be releasing a video later on today in regards to when should you sell. The real answer is I'm not 100% sure, but we can use historical data to perhaps predict the future. That's really kind of what we're doing with technical analysis in I think a better manner, because the charts don't lie. You know, things can be very different in regards to variables. But this is really what we're looking at for the dollar. And actually yesterday, and we saw risk do quite well on this, you had, we don't want to go to tomorrow, we want to go to yesterday, JOLTS openings for the US, and this came out at a bit of a miss. So The pressure is really on for the Fed to lower interest rates. Today, we've got ISM servicing PMIs expected to rise, very much in line with PMI cycles, which we've looked at previously. Tomorrow, you've got the Eurozone expected to actually cut rates. You've also got US unemployment claims. And then on Friday, you've got US non-farm payroll, which is going to be interesting. Because if this comes out a miss, it's going to do well for risk. It's going to see the dollar weaken a little bit. It's suggesting a little bit of heat's being taken out of that labour market. It's going to see risk do rather well. Enough of the boring macro-y stuff. Let's talk about how institutions are gobbling up Bitcoin right now. So this is from Eric Balanchunas, great guy to follow, along with Jeff Safart. I believe I'm saying that right. If you want to stay up to date with inflows that you're seeing in regards to institutional instruments, it's going to be very important when we start to get altcoin ETFs, which we're going to come on to in just a second. Fidelity not messing around. Big time flows all around today for the top 10. Near $1 billion in a day, ladies and gentlemen. Second best day ever since mid-March. 3.3 billion in the past 4 weeks. Net year to date, 15 billion, which was top end of our 12-month estimate. The third wave is turning into a tidal wave. So year to date, we've only had Bitcoin ETFs this year, and they're already at their yearly top estimate. It's blown all expectations out the window. Why is that? Well, it has a lot to do with what's happening with fiat. Bitcoin is a short dollar trade. Understand what the dollar is, the instrument that it is, the currency that it is. Understand what makes it work, how it works, and it's a very clear picture. Just like we say that the Nikkei is the short yen trade, Nikkei being the Japanese stock market is a short yen trade. All economies are moving towards a Japanese-style system. And The Princess Yen is a great book to read in regards to that. For anybody that's interested in a little bit more sort of techno, maybe not techno, technical approach in regards to the Forex market and certainly the yen's role in that. So you can see Fidelity, huge inflows, really sort of funny tweet here from Eric. Obviously, Fidelity is supposed to be a bit more of a grandpa-esque or grandma-esque investment institute. So he also goes on to say the Bitcoin ETFs on a 15-day inflow winning streak, pulled in 2.4 billion in the past month. Unbelievable. Only 2 ETFs have taken in more. The SPY, which is the largest instrument for the stock exchange in the United States, and the VOO. Year to date, net 14 billion. The ability to bounce back with renewed interest after a couple of nasty sell-offs is rare for hot sauce type strategies. Shows staying power. I mean, come on. You know, it is here, ladies and gentlemen. Again, talking about that question, when should you sell? Well, are we going to do something similar to what gold did after it had its first ETF in 2004 or the S&P in 1994 and go on a bit more of a prolonged? Could the super cycle be here and could institutions be the reason for it? It's a very interesting question to ask. I'm not sure we fully have the answers for it. So we have looked at Bitcoin. We still have that broader plan for Bitcoin taking us to $151,000, which is well over 2x from where we are currently. We did look at some smaller structure playing out that was potentially going to take us to 92,000, let's call it, because it's 91,900. And you can see right shoulder very much forming, Bitcoin very much sort of within this pattern squeezing up, and we are looking for a break towards the 91,000s. The next leg of this market is set to rock and roll. Where's all that coming from? We looked at it yesterday in regards to the weak dollar. That's going to see markets do well. What I want to do now, ladies and gents, is actually dive over to a clip of Brad Garlinghouse talking about altcoin ETFs and the fact that they are on the near horizon. Obviously, Ethereum was massive. We looked at ETH, BTC, and ETH dominance to kind of help us with that. But let's dive in and let's actually take a look at what Brad has to say, and then let's look at some technical signals in regards to, and what I mean by that is charts, all pointing to upside for altcoins. And that's likely going to be fundamentally driven just like we knew ETH breaking out against BTC or ETH dominance would be. So let's dive into that, and then we'll get into some technical indicators that sort of back this up.
Is Ripple CEO Brad Garlinghouse in studio, no less. Let's get to Ether first. Word on the street is that that spot Ether ETF is going to come alive. It's alive next month, as early as next month, maybe July. Who knows? What do you think?
I think that's right. And I think it is a big deal just in terms of further opening the markets to more people who want to access it. Obviously, the Bitcoin ETF went live in January, and you saw 10 billion. I mean, it took, I think, 2 months to reach the same level it took gold ETF to reach over like a year. So the interest in this space remains very, very high. And I think the ETH ETF will do extremely well.
What do you think is behind the SEC becoming, let's just call it more pragmatic about cryptocurrency ETFs and the approval process?
Well, I think the first thing is they've lost a lot in court. And so, they really got dragged kicking and screaming across the line to get the Bitcoin ETF live. And I think they realized that if they were going to drag their feet and fight around the ETH ETF, that likely the same outcome was going to happen. And I mean, it's frustrating that we have to go through the courts to get those positive outcomes. The United States should be investing in these technologies. We should be embracing these from a job creation, from a technical innovation. And unfortunately, this SEC has been fighting it, every step of the way.
And that's what this is all about, ladies and gentlemen, unlocking that capital that currently can't access the cryptocurrency space. And with ETFs, there's going to be trillions, in my opinion, that flows into it. We're already seeing that with the massive demand for Bitcoin. We're going to see that for altcoins. And if you understand portfolio management, part of it is diversification and being in uncorrelated assets. And we know there's a massive crossover there with Bitcoin and risk more broadly. If you overlay Bitcoin on the QQQ3, which is WisdomTree's 3x leveraged NASDAQ instrument, they move very much in tandem, but there is a bit of a discorrelation there. You want diversification, and actually Bitcoin and altcoins more broadly definitely have their place in any smart portfolio. Let's talk about some indicators that help us, some technical indicators that help us to really understand that we are going to be getting that ETF. And this is 21 Shares Crypto Basket Index. So this tops really the sort of top cryptocurrencies out there. This is currently sat at $15. So it was about 13 when we started looking at it. Remember, we had a smaller head and shoulders target that got met. We're looking at this going to $53. So a massive run out of this. This, I must say, has a lot of Bitcoin in it. Okay, so this is why this one isn't as bullish as Bitwise, which is the top 10 crypto index. It's got a lot more altcoins in it. There's just under a 10x coming for this. There's going to be a driver of that in regards to the technical pattern that we've got. We've still got a smaller technical pattern that's yet to play out. And there was actually a smaller head and shoulders down here that we don't have on the chart. So this is showing that altcoins are going to do rather well. And of course, really, the big one for me is Grayscale Digital Large Cap Fund. This has got just under a 10x, about an 8x to go. And then when we couple that with Total 2, which we've done a hell of a lot of work on, we think over a 3x for the altcoin market in general. There's likely going to be some sort of fundamental news on the back end of all of that. And I think that has a lot to do with ETFs, the enabling of them, and what that's going to mean for the markets more broadly in terms of unlocking capital. So that is it from me, ladies and gentlemen. It's a very bullish future we have ahead of us. Hang in there, understand where things are going, understand where we've came from, understand what is facing us, and understand what the future looks like. And it's an amazing picture that is painted. That's it from me. If you've enjoyed the content, like, it's appreciated. So is a comment, and I look forward to seeing you all in the next one. Thanks a lot for watching. See you in the next one.